Well, good morning, and thank you for joining us this Friday. We just got back from Mega Camp late last night and have not only a market update on the national data, but
The
also the
national?
Houston data, and then the information for what we figure is most fascinating, which is the takeaways from the room of Gary's top 50 agents and teams worldwide, and a couple key updates for you on that. If you take nothing else from this market data section, and I know there's a lot, and I know some of you like data, but most of you don't. But if you take only three things away from this presentation on the data today, number one, especially for the listing agents, please, please, please help your clients see this data, get ahead of the curve, and get your price reductions in now. That's number one. Number two, what you'll see is that 76% of homeowners have more than 50% of equity in their house. And we will give you the best two questions that other teams are using in order to have dialogues with those people to see if they may be interested in moving. And number three, what you will also notice is that the data that we are about to go through is concerning. There are a couple pages on here, I think, that is the first time that they have ever made it into this market report. And if you take nothing else away from the concerning data, the activity is, it is critical to do the work. And notably, we break that down into win the morning, practice your dialogues daily, and make sure that you're having at least 100 conversations a month. Again, at the end of the presentation, we will give you our top tips of what we got out of the room with Gary, the KW leadership, and the top 50 agents worldwide. Before we get into the data itself, as I know that there are a few of you where your eyes will glaze over when you see things like this, know that I have asked Paige for two things. Is one, because I love this stuff, is that when I get too far in the weeds, she's just going to say next.
Next.
And when I get to the standpoint where I say things and it's again, wah, 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 she will say repeat. And hopefully with next and repeat, we will be able to find a reasonable balance.
Next.
Also, for those of you that don't love the data or don't know why it is important for us to start with the data, the reason that it is so important for you to care about the data is because it gives you the depth behind your recommendations, right? You are here to help your clients make wise decisions, and it's critical for you to understand the why behind just the how. And in addition, by understanding the information and the data, is it gives you the confidence in the meetings. Because in these uncertain times where there is a lot going on and there's a tremendous amount of noise, clients are seeking advisors who are able to give them confidence and a path forward. So again, that is why we're starting here with the data today. Big takeaways from GDP numbers is that we are in range. That is a very good range from the Fed at about 2.5%. Also for GDP, that gross domestic product numbers are in range. So these first two slides are good, and it means the economy is growing. This slide here, number 3, is the new slide that we have not seen in any other KW market update, and it is probably one of the most concerning slides personally, and ultimately it is a big driver of this conversation. What this slide gives you is the probability of a recession. And as you see, the probability of a recession is at the highest it's been at any point since most people on this call have been alive, right? It is at the highest, a recession probability is at the highest it has been at any point since the 1980s. Now, again, nobody knows when we're in a recession, because the only way that you know that you're in a recession is because for the last 6 months it happened, right? You can only tell a recession in the past. But because the recession probability is so high, this is one of the fundamental reasons that you have seen whipsaw and crazy stock market changes over the last 2 weeks, because what the market doesn't know is, are we good or are we not good? and we're going to talk about some implications of what this means for you. But the data on this recession probability is a new chart from KW. It is the highest it's been in. And if that gives you an opportunity to do more for your listings and for your daily input, this is one of those slides that you want to have an understanding that it is a big deal. Moving on from that, unemployment is very reasonable at 3.6% on an annual basis. But this number here, again, going back to the market drivers, is the monthly unemployment data. This came out very recently. It was also one of the reasons that the market has been going crazy in the last few weeks. Unemployment is the highest that it has been since October of 2021. Again, unemployment numbers are the highest that they've been since October of 2021. And so again, keep track of some of this information. Recession's at its highest, GDP is good, unemployment is going up. Another way to look at unemployment is the number of people who are unemployed as compared to job openings. And as you see on that right side, that those numbers are coming together. Those numbers coming together, again, does not bode well for the future economy. The other third horseman out of the activity of what the Fed is trying to manage for, and what is the big predictor of what the economy will be, is inflation. Obviously, when you look at this over time, the Fed's target has been about 2%. It's been a very good, very healthy number for a long period of time. During COVID, we gave away a lot of money. The lot of money meant that we had high inflation. And obviously, the narrative in the news has been, what does the Fed have to do to raise interest rates, which means expensive mortgages, but raise interest rates in order for us to bring down the rate of inflation? And as you see at a trend line, it is coming down. And on a monthly basis, inflation is the lowest it has been since February of 2021. So again, data so far. Recession, highest probability it's been at since the 80s. Nobody knows when it will happen, but that's the highest probability. GDP is good. Inflation, getting better. Unemployment is creeping up.
Bob, we're wah-wahing. Help my English major brain understand why, as a real estate agent on this call, do I care about GDP, unemployment, and inflation? Why does that matter to me?
Paige, that is a great question. And we're going to get into the details in just a minute. But the big two reasons are, one, it gives you an understanding so you can help your clients make wise decisions. But it gives you an understanding of what the economy is likely to do in the future. And so again, if you remember at the start of this call, I said, if you are a listing agent, the data that you are getting today should be a call to alarm for your sellers to get price reductions. If there is an impending or a probability of a recession, you want your sellers to get out now. That's number one. And number two, what you do with this data is it helps you forecast what the cost of money is likely to be, right? Mortgage rates. Because when your buyers buy, it's the cost of the house, it's the cost of the money, and it's the cost of maintaining the house. And as what we're about to go through is you see the cost of the house is really high. The cost of the money is really high, but it may go down. And the cost of owning the house is as high as it's ever been. And that gives you an ability to help your clients see around corners and see what's likely coming. And Paige, again, we're going to get into details in a second. Answer so far, good to proceed?
Sure.
When we look at what is the impact of that data on the real estate industry, or specifically it says, as Paige says, why do I care? We're going to give you a little bit of numbers to remember, and then we're going to get to the punchline. From this slide, the number you want to remember is 4.2 million. Again, the number you want to remember from this slide is 4.2 million, because there are about 4.2 million annual home sales. And this is a big thing. We're going to look at the Houston data on this in just a moment. But when you look at what has been happening monthly to home sales, not surprising, the numbers are worse than they were last year. And in Houston, for the last few months, the numbers have been worse than they've been at any point in the last 4 years. Specifically, and again, this is really important for listing agents. When you look at home prices, this is the long-term trend line for home prices. And so what this means is it gives you a yardstick of where home prices should be over time. And as you saw in the run-up to the Great Recession, home prices were overvalued. As you look at what happened after the Great Recession, home prices were undervalued. If you look at what happened during COVID, everything spiked. And so the big takeaway from this slide is that right now, according to the long-term trend line, home prices are about 9% above where they should be. And so for those of you that have clients and your buyers are like, oh man, I can't wait for this to crash. I'm going to get these great deals at 20 to 30% off like we could in 09. The data doesn't support that. For those of you that have sellers and they say, I'm just going to hang on for another year or two and I'm going to get more money next year. The data doesn't support that. And so again, the takeaway from the first slide is about 4.2 million sales a year. And the takeaway from this slide is that home prices nationwide are about 9% above where they quote unquote should be. This is another really important point right here. Home prices on a monthly basis are the highest they've ever been. So again, remember, sales are down, prices are up. Remember, sales are down, prices are up. When we look at then what happens when sales are down and prices are up, well, it means that less people buy. And that's exactly what you're seeing. Inventory is dramatically up over where it's been. And so again, for those of you that are listing agents on this call, prices are high, sales are down, inventory is up. What do you think is likely coming next? That's the data you can use with your listings to help you get the price reductions so they lead the curve, not that they're following the curve. And don't worry, we're going to get into more details on that in Houston in just a second. The other part of this information that's really interesting is what is the cost of money? Because that's been a big driver for our industry for as long as most of you have been in production. The boom of the COVID years was because the cost of money is really, really cheap. And for a lot of clients, the cost of money actually cost them more than the cost of the house. In this case, what we've seen with mortgage rates is that mortgage rates right now are the lowest that they have been since October of 2022. Again, mortgage rates are the lowest that they've been since October of 2022. And when you look at why, it's all of the reasons we just went through. There's a fear of a recession, more people don't have a job, and there's less job openings. And what that's done for the Fed, especially over the last few weeks, is it's caused fear. And that fear says, oh my gosh, maybe the economy is going to slow down. And when the economy slows down, what is the lever we have? Well, we can make money cheaper. And that's the position where the federal government is in right now. And so, of course, back to Paige's point, you asked yourself, right, why do I care? This is the first part about why you should care, because you get a sense of what's going on. And I know that most of you feel this in the business. You're like, hey, it's hard. Hey, my clients don't want to move. Hey, it's difficult. And if you look at what it means between the cost of the house and the cost of the money, is homes are the second least affordable that they've been since the 1970s. I'm going to say that again. Homes are more expensive on a relative basis now than at any point, with one exception, since the 1970s. And so you're like, oh, real estating is hard. This is your slide for why real estating is hard, because house prices are expensive and your cost of money is expensive. Also, when you look at the data, and again, I'm going to go to the mortgage market because obviously that is ultimately what drives the cost of the money. What also makes it hard is that you have a lot of people who are locked in to their current house because the cost of their money is really cheap. And so in the luxury market, it's fine. Hey, look, I'm just going to buy a second house and write out the other one. In the lower segments of the market, who are first-time home buyers, they're like, I can't afford a house. And in the middle market, where Houston has a lot of it, they're like, well, I'd like to move, but I'm not sure I can afford to move. And more than anything else, that's exactly why you're focused on clients who are moving for life reasons and not money reasons. Now, one of the things that we found that was most interesting as part of this data, and again, the highlight, 76% of homeowners have at least 50% equity in their house. That's a lot of money. This is, again, I would say, if you're writing things down, this is definitely something to write down. Where a lot of these top teams are getting a lot of their traction is they are asking two major questions around this. Question number one, what do you think your home is worth? Even in many cases, before they ask the address or the neighborhood, they ask, what do you think your home is worth? And number two is they ask, what do you think you'd like to do with your home equity? And the reason that that second question, what do you think you'd like to do with your home equity, is important, and potentially more important than the neighborhood question, is because it goes back to the dream. And as many of you know, Ford, family, occupation, recreation, dreams are some of the best way to get people to talk. And so if you have an opportunity where they have money in their house to get them to dream with you, then maybe you're able to help them make a wise decision to unlock some of the value of that house. And so again, question number one, what do you think your home is worth? Question number two, what do you think you'd like to do with your home equity?
Bob, can I also just interject here quickly? For those of you who hear the objection, well, I'm just waiting for the market to crash and these foreclosures are coming. Well, if you're sitting with 50% equity in your house, you probably ain't gonna be foreclosed on for very long, right? So that too is a lie.
And that is a big statement. We will come back to that. I want to get a couple items here. Paige again asked a question and she said, hey, all that gibberish, Bob, that you talked about in the beginning, what does it really mean for us? And Gary broke this down into 3 scenarios. And again, I think some of this is very telling. The outcome of any of these scenarios for you, I think, is the same. Before we go through them, number one, listing agents, help your sellers make wise decisions and get ahead of what's coming. And number two, for you, do the work. Win your morning, work on your scripts, and specifically make sure that you're contacting at least 100 people a month, because that's your win in any of these scenarios. So number one, scenarios forecast by Keller Williams, is a no recession situation. Unemployment's below 4%. Interest rates falls to about 6%. Again, we're 6.8, so it's not a huge amount, but home sales go to 4.5. And so if you remember, the magic number from the slide earlier was 4.2 home sales, 4.2 million home sales a year. What this gives you is, in scenario number one, a market that is about 7% better than where it is now, right? There's not enough business for everyone, but there is enough business for anyone who will do the work. Scenario number two, a recession. And again, this is where, again, the recession index, it is as high as it's ever been since most of you have been alive. Unemployment jumps up to 6.8%. Interest rates fall. Fed's got to go do something. They're going to cut the cost of money down even further. But what's good for us is home sales are up about 19%. You're like, wow, if it's a recession and less people have work, why would I sell more homes? Because the cost of the money came down. And scenario number three is a banking recession, similar to what we saw in 2008. Gary discounted this both from the stage and background, but it's a possibility. Unemployment jumps, interest rates fall back to COVID-ish times, but home sales also go down because it's more of a crisis. The one good news, again, I'm going to leave from the data before I go to local data. The one good news is that more people are using real estate agents than at any point than NAR has been tracking the data. And so what is the takeaway from this slide? The takeaway from this slide is that you matter. And the takeaway from this slide is that if you help clients make wise decisions by using the data, helping them get ahead of what's coming, you have an ability to add value. And that's how and why you matter. And it's how and why you get paid. So again, you're like, Bob, this is national data. Why do I care about national data? Like, this is just nuts. Tell me what it means for me and tell me what I can have with my clients in order to go get a price reduction or help someone buy or help someone not buy. And you know what's crazy? We're going to look at the same market and we're going to look at the same data, and the answer is going to be very similar. So in the Houston market, and again, you can all get there on our website. This is nothing more than the trends page, updated daily. Number one, you're going to see at the top, we are still at the high end of a seller's market. We are not quite at a balanced market. Balanced market means, again, it's about 4 to 6 months of inventory for everything to sell. We're right about at that cusp, but we're not there yet. But you're going to see prices are up, sales are down, pending is materially down, pending sales materially down, and there
that's
are
ugly.
more price reductions by a lot as compared to last year. So again, we're going to go through that data, but that's your tagline. Your tagline is the Houston data is trending the national data. So everything that we just went through, for those of you that have listings where people are like, oh no, it's fine, going through the last presentation and parts of this presentation may be helpful. So let's look at the trend line. Pending sales are the number one predictor of future closings. And so what's happening with pending sales? They're down. Now in Houston, here's what's really scary in my book. This is the scariest data I've got for you today. We had a number of storms. You all know this, you lived through this, there was a lot of problems. Normally, when we see storms in a healthy market, you have a storm, you see the dip, we have a big dip, and then what happens? Skyrockets. All those people who were going to go under contract decided to say, I'm going to wait a week. I'm going to wait 2 weeks. I'm going to wait 3 weeks. And the data I've got for you today is that the 3 weeks post the storms is less than at any point in the last 2 years. If that doesn't scare people who are trying to sell their house in order to move on with their life, I'm not sure what does. If that doesn't scare you to say, oh my gosh, I need to make 100 conversations a month, I don't know what does, because that's an indicator of what's coming. Number two, days on market, highest it's been at any point in the last 2 years. Number three, price reductions. You look at that over a trailing 13-week basis, highest it's been at any point. And then you're like, okay, well, where are we starting from? This data here gives you a great insight on what's going on in Houston. And again, it's very similar to what we just went through on a nationwide basis. January, we outperformed last year as a market. Fantastic. February, we outperformed the market. When we moved into March, as you'll see, it was the worst March we've had in the last 4 years. Now, again, fortunately, you keep outperforming the market. April got a little bit of the March sales back. And so April was better than 2 of the last 4 years, including last year. May, pretty similar to where we were last year. But this is the data of what you're feeling, June and July. June and July data, we are the worst that we've been in the last 4 years, not by a little, but by a lot. And so again, if that doesn't give your sellers information on why they want to reduce early and get out, and if it doesn't give you information on why you need to increase the amount of inputs that you are doing to be able to find more clients, I'm not sure what does. Because it's the same activity in Houston. Prices are at an all-time high. Your cost of money is still expensive. Your sales are down, and your pending sales are down a lot. And that's the reality of where you live. And the advantage of at least knowing the reality of where you live and likely what's coming, it gives you the opportunity to do something about it. So now here in the last 5 minutes, we want to give you a little bit of information that we think is helpful of what we learned from Mega Camp and being in a closed door session with Gary Keller, Keller Williams Leadership, and the top 50 agents and teams worldwide in the company out of over 200,000 people. Number one, which I thought was an absolutely fascinating discussion that we had, and it will take for some of you a moment to consider this and think about this, but there is only one reason that buyers buy. And that one reason why buyers buy is fear of loss. I'm going to say that again. Yeah, there's only one reason that buyers buy, and that is fear of loss. And it is the fear that someone else will get the house before they do. And so in a market that we are headed into, and again, currently in from the data, there's not a lot of fear of loss because there's a lot of people sitting on the sidelines. And that gives you and your sellers the ability to understand why an event-based pricing strategy is so powerful. Related to that, tactically, one of the things that we had not heard before, but we thought was incredibly clever, is that a number of these markets are going out and they are doing seller offers to buyers. Again, seller offers to buyers. And what that means is as simple as part of a conversation, but what does the number need to look like for your buyer to make an offer, right? What does the number need to look like for your buyer to make an offer? And related to that, back to your seller, the conversation is brilliant. The conversation, especially for those individuals who have equity in their home and have used money to improve their life, like go on a vacation or buy a car or invest in time with their family, where those items don't specifically give them a future return on investment, but they give them the life they want to live. And in this case, to your buyer who has money, it is buy the life that you want. 100K price reduction will buy you the freedom from this house. It's like a stock. There's a market. There's a market price. This is the current market price of where your house is. It sounds, based on all the things you've told me, that you want to buy freedom. Here's the price to buy your freedom from this house. No doubt that those languages will be tweaked up. You might be having a couple guest speakers over the next few weeks to give us more on that. Number two, really interesting data point. In the closed door room, the discussion is that most real estate agents right now are making the exact same mistake. You probably heard this in a variety of ways, but what was fascinating as part of this discussion was just how common this mistake is. How easy it is to fix, but ultimately how common it is. And the fear, again, this is the fear because KW is based on scale. The fear is that about 30% of realtors will get out of the business in the next couple of years. Again, the fear is that about a third of the industry will not be in the industry in the next few years, given all the changes in the market. Now, again, we hear this and we're like, oh my gosh, this is great news because, right, you all are going to be the winners. And when real estate agents drop out of the game, it gives you more business. But obviously, when you're running brokerages at scale, the fear of a lot of agents getting out of the business is difficult. And again, the mistake that most agents are making is the same mistake, which is they are not asking for the appointment. And again, the biggest mistake that most realtors are making in discussions behind closed doors is the same, which is real estate agents are not asking for the appointment. And if you put on a sticky note on your desk that your number one job is to get face-to-face with a prospect to talk about real estate, maybe it's Zoom, maybe it's in person, but if you put your number one job is to get face-to-face with a prospect, by the intentionality of your language, of your text messages, of your actions, you will do better. And number three, which is probably the single most powerful thing that we got out of a closed door session, is something that reminded us of a great quote by Jim Rohn. And what Jim Rohn said is that you are the average of the 5 people you spend most of your time with. Again, you are the average of the 5 people you spend most of your time with. And what was fascinating is in that room, it was not one word or 2 words that they said, but it was who they were. And so what was fascinating is the top 50 people, nearly to a fault. Every single person we talked with did about three things. Is one, they did something to develop their energy. For most of them, they had very structured workout routines, right? They did something to develop their energy. Number two, what the commonality was of the 50 people in the room is they had a morning routine that they won. And you're probably not surprised, but if you're top 50 in KW worldwide, you probably are winning more often than you're losing. But again, having a morning routine that you're winning. And number three is that they took time daily to work on the language that they were going to use most often. For some of them, it was public speaking. For some of them, it's with their team. Because I know you heard this quote from Phil Jones, which is the worst time to think about what you're going to say is in the moment you're saying it. And so the takeaway that we'd leave you with is if you are not working on your scripts and your dialogues daily, and you do not have a morning routine that you're winning, and if you are not working out or finding some way to grow your energy, that it may not put you in the room that you want to be in. With that thought, I'm here at 9:00. Thank you for your time this Friday. We will send out more information and all the handouts. And if you have any other questions, please don't be shy to email us.
Have a great weekend, guys.
Thanks, y'all.